CareTrust REIT is a real estate investment trust that provides care for the elderly. They provide properties where older people that need some type of health care in their older years can go and live comfortably and receive the health care they need while they're a resident. This is a real estate investment trust that pays a nice dividend and has been a real stable company. My name is Victor. I have an MBA business experience, and I like to analyze companies that I consider investing in. In this case here, I'm going to be taking a look at CareTrust. Do me a big favor and like my video and subscribe to my channel. You can see other videos like this where I analyze companies. I also review the market and share with you my thoughts. Now let's get into CareTrust. I've created a process for myself to invest in REITs, and I encourage you to develop a process yourself so you can evaluate companies and know which companies you're willing to invest your hard-earned money in. For me, it involves 4 questions followed by a decision to buy, hold, or sell. First question, do I want to be a part owner in this company? And second, do I believe the management team's doing a good job operating the company? The dividend payout, because this is an investment that really is driven by the dividend. Is the payout less than 80% the funds from compared to the funds from operations? And I want to discount the stock. That way I can get both a really nice dividend and appreciation in my investment. Based on the answers to those questions, I buy, hold, or sell. In the US, the population is aging, and there are a lot of people above the age of 65. A lot of those people need a place to live where they can receive some health care. And this particular company provides such a product, such a living area for them. So it's been a really good fit. I think there's been very good consistent demand for this type of REIT. And I really believe in healthcare. I like this company because they're providing what I think is a living situation to many people that need it. So there's very good demand. And I like healthcare because it tends to be stable. A lot of these people are covered by Medicare and their insurance. A lot of these people have saved up for a lifetime and are ready to live comfortably. So I like the company. I like the industry. So the company's been growing over the last few years. Over the last 4 years, they've grown 25%. And although if you compare that to a tech stock, that's not drastic growth, but for a REIT, that's really good. That's really good. What's even more comforting about this real estate investment trust is that they're very consistent. If you look at their revenue for the last ended quarter, they just reported their Q2 earnings. Slight increase in revenues. Profitability is there. For the first 6 months of the year, slight increase in revenue again. So the company's in good health if you look at the amount of revenue they're bringing in and their profitability. With real estate investment trusts, you really want to track the payout when you compare what they're paying as a dividend compared to funds from operations. So here's a funds from operations schedule that the company provided. They pay a quarterly dividend of 28 cents per share, but their FFO, funds from operation, is 36 cents. So it calculates at 77.7%. So the dividend is in good shape. It's secured. And again, this is a consistent operating company. The statement of cash flows, again, is consistent. The cash flow from operations decreased just slightly if you look at, cash flow from operations, but not enough to be alarmed with. It's just a very consistent operating company. So I've valued CareTrust, and I believe the stock price is currently, it's selling at a premium of 2%. So it's almost fairly priced, but it's actually selling at a slight premium. And the way I get there is two methods. First is I value the company based on that dividend. Since it is a good solid payout of 77%, I value it based on that dividend. And the value per share calculation is right here. And I get to a value per share of $18.67. The stock price is $20.26 currently. So if I look at just the dividend itself, it's actually selling at an 8% dividend. I'm also looking at the earnings per share method. Their earnings per share is expected this year to be 67 cents per share. REITs have typically a very high PE ratio. In this case here, historically, they've been at 36. So if I take those factors with a 3% growth rate, which is more than what they've been experiencing, I get a share price or a share value of $20.97, but their shares are currently trading at $20.26. So there's a slight discount if we use the earnings per share value. I averaged the two, 50-50, taking both, and I get to about a 2% premium that you'd be paying to buy CareTrust. So let me revisit my scorecard for CareTrust. First, I think the company's terrific, really well operated, very consistent, and the management team deserves credit for that. The dividend payout is less than 80%, but there's no discount on the stock. You're actually paying a slight premium. So I'm going to be holding my shares, pays a nice dividend, but for now, I'm not buying additional shares of CareTrust. Looking at where the stock price is traded over the last year, it's presented opportunities to catch the stock when it's really low point. If you look at less than a year ago, you could have bought the shares at $17 per share and saw your investment rise in value. And that's why I do my analysis. I determine what I believe the stock is worth, and then I track the stock. And hey, when it's selling at a discount, I'll pick some shares up. When it's selling at a premium, I might hold or sell my shares. So that's why I do my analysis. Year to date, the company stock price is up 8%. And they pay a nice dividend of 7.1%. That's my video on CareTrust. I encourage you to find your process, find your method of finding good companies, determine a process that works for you that you're very comfortable with. If you have a long-term process, you're just going to be a better investor over time because you learn from both successes and failures that you have in your investing. And any investor who says they haven't had, some failure isn't really telling the truth. Even Warren Buffett's lost money. So that process, I think, could be the biggest asset that you have in your portfolio, which is a method of finding good investments, being able to determine a good investment, putting your money, your hard-earned money into it, and watching it grow over time. It's quite interesting to me, and I hope that you found this video really interesting. Do me a big favor and like my video and subscribe to my channel. I'd really appreciate that. With that, good luck investing in 2023.